Hey everyone, welcome back to our channel. If you're thinking about starting a startup, you'll need to know some key terms and concepts to get started. In this video, we'll go over some of the most important terms that every person starting a startup should know. So, let's get started. Number 10, MVP. MVP stands for Minimum Viable Product. It's the earliest version of your product that you can release to the market to test your assumptions and gather feedback. This is a crucial step in the startup process, as it allows you to test the viability of your idea without investing too much time or money. Number 9, Equity. Equity refers to the ownership percentage of a company. If you start a startup, you'll need to decide how to allocate equity among the founders, investors, and other stakeholders. This is a critical decision that can have a significant impact on the success of your startup. Number 8, Burn Rate. Burn rate refers to the rate at which a startup is spending its cash reserves. It's an important metric to track, as it can help you determine how long your startup can operate before running out of money. This is especially important in the early stages of a startup, when cash reserves are limited. Number 7, Runway. Runway refers to the amount of time a startup has before it runs out of cash. It's calculated by dividing the cash reserves by the monthly burn rate. This is a critical metric to track, as it can help you determine when you need to raise more funding or start generating revenue. Number 6, Seed round. A seed round is the first round of funding that a startup receives from investors. This funding is typically used to develop the MVP and launch the product. This is a crucial step in the startup process, as it can help you secure the resources you need to get your startup off the ground. Number 5, Angel Investor. An angel investor is an individual who invests in startups in exchange for equity. Angel investors are typically high net worth individuals who are looking for early stage investments with high growth potential. They can provide valuable funding, mentorship, and networking opportunities for startups. Number 4, Series A, B, C funding. Series A, B, and C funding refer to the subsequent rounds of funding that a startup receives after the seed round. These rounds typically involve larger amounts of funding and are used to scale the company and expand the product offerings. Each subsequent round of funding increases the valuation of the company and dilutes the equity of the founders. Number 3, Valuation. Valuation refers to the estimated worth of a company. It's an important metric that investors use to determine the potential return on their investment. Valuation is typically calculated using various financial metrics and market trends. Number 2, Exit strategy. An exit strategy is a plan for how the founders and investors will exit the company and realize their returns. This can include selling the company to a larger company, going public through an IPO, or continuing to operate the company for long-term growth. Number 1, Product market fit. Product market fit refers to the alignment between the product and the target market. It's a critical step in the startup process, as it determines whether there is a demand for your product in the market. A strong product market fit can lead to sustainable growth and success for your startup. So, there you have it, the top 10 basic terms every person starting a startup should know. By understanding these terms and concepts, you'll be better equipped to navigate the startup world and make informed decisions for your startup. Of course, there are many more terms and concepts to learn, but these are a great starting point. Thanks for watching, and don't forget to subscribe for more helpful videos on startups and entrepreneurship.